So, Luther, welcome to the show. Very excited. Now, this is the first time we've physically met. Obviously, we have Zoomed or Microsoft Teamed or any of the other platforms, but it's great to finally meet you in person. Now, I've been looking forward to this one because I think you've got a really interesting job, but I think you've also got a really interesting history. And I'm sure everyone is quite keen to hear it. And yeah, let's just get into it. So I think let's start out. Obviously, right now you're running Blue Chilli. So why don't you explain to the audience out there what Blue Chilli does, and then we'll come on to you a little bit later.
Sure. Thank you. And it's great to be here. Blue Chilli has gone through a number of iterations over the years. We've been around for 6-7 years. There'll be people in your audience that when they think Blue Chilli, they think one thing, maybe the dev shop that built apps for people 5-6 years ago. They will see us as a venture fund, and we do have a venture fund that is past that new investment period and is just working on the investments it has. Some people will see us as a corporate accelerator. And what we do right now, the latest iteration, if you will, where we've developed to, is working with scale-ups. So that's later stage startups, primarily who already have a product in market, some level of product market fit, starting to build a team and get that specialization that you would know everything about in terms of recruiting into that, and working them through an accelerator with corporate sponsors to try and supercharge their business, get them to that next level where they're able to scale their businesses, ostensibly being at the end of that hockey stick where they start to get that exponential growth.
Yeah, cool, good. And in terms of yourself, what we do at Nudges, I think we talked about when we first met, is we tell stories, right? We help founders tell stories and we help them understand their stories so that they can attract people that align to their story. We went through your story when I first met, and it's a cracker, right? It's an absolute cracker. It's got lots of variation in it, it's got lots of differences in, and you probably wouldn't have picked where you are now 20 years ago, right? So don't have to go through the whole thing, but let's go through the highlights. Talk to me about, I guess, where you started and the poignant moments that have taken you on the winding journey to end up where you are now.
Sure. I think all of us have those little inflection points in our lives.
They do.
Sometimes we don't know what they are and we don't see them until we look back.
Yep.
I always joke, Sebastian, our founder, and I always joke that I like the Navy so much I joined it twice. So I started out in Canada in the Royal Canadian Navy. I was a warfare navigator, command qualified, and I did work on a couple of virtual reality warfare simulation projects. The Royal Australian Navy, I guess, heard about me. I worked with the Aussies at sea a little bit, and I always joke it was like the witness protection program. They offered me a plane ticket, citizenship, a uniform.
New identity?
Almost. I didn't have to change my name. And I came to Australia and joined the Royal Australian Navy for a number of years. Worked on a refurbishment of a big simulator project that they had here.
Yep.
Went to sea, and as usually happens, there's that inflection point. And I was about to go to the Gulf with HMAS Canimbla, one of the larger ships we had.
Yep.
And I got a job offer from Rothschild, the British investment bank. Just had a baby boy, and I'd seen a lot of naval officers in the past do their 20, 30, 40-year careers, and usually they didn't end up with a family at the end of it.
Awful.
Awful. But they had wonderful careers, right? Amazing experiences. And the Navy taught me a lot. And, I was there for 15 years. Learned a lot about leadership, learned a lot about small teams. I think I learned a lot about loyalty. And, the investment banking world was interesting, especially in the 2000s.
How do you get an offer from someone like Rothschild's, which is really at the top of the tree when it comes to that space, when you're running around on warships? How does that happen?
When I came to this country, I knew I probably wanted to leave the Navy at some point in time. So I started working on an MBA, some finance courses, and one of my finance courses topped the course, got the national prize, and the professor was working for debt capital markets at Rothschild. Long story short, he offered me a job. The bank said no. I had no experience, and he made a bet with the bank. And he said, with the senior people and the CEO, he said, if Luther can get a higher mark on all of our aptitude tests that we run globally for Rothschild, then anybody else on the executive team, you have to give them a job. And they went, done. It's a bet. It's a deal, right? It's investment banking.
They love a deal.
They love a deal and they love bets, right? So I get the call from my soon-to-be boss. And he says,
pressure.
listen, no pressure. And he says to me, listen, you're North American. You know, standardized test, easy, you'll ace it. And I went, I'm Canadian. We don't do those. Anyway, did them, aced the tests, and I got a job.
That's a cool story.
And it was, you know, it was a good period in investment banking. I worked Rothschild, ABN AMRO, Macquarie Bank. In between those gigs, I had a couple of my own startups. Worked on a music startup. We were one of the largest digital music providers in Australia, and you know, before the iPod. Had a finance startup that I sold, made lots of money on. Started another finance startup, and promptly lost it all. So, you know, as I talk to founders at Blue Chilli and we work with them, I can usually bring the stories that are in their future, whether it's stories of failure and loss, disaster, whether it's stories of, you know, success. And because I've been on the investment side as well, I've run portfolios for large families. I was one of the first partners. I was actually, I think, the first advisor at Coda Capital, large wealth management group. And the families that I managed there and at private office, Commonwealth, you know, were in the hundreds of millions of dollars, and I would manage their whole portfolio and their families, families' wealth as well.
It's an insane resume, you know that, right?
It kind of is.
It is when you look back.
It is when I look back, and I have to say that there's been a lot of ups and downs. And sometimes I sit back and think, geez, I'd just love to still be in uniform with a couple of thick gold bars on. I've learned a lot, and I think most of all, it's probably kept me young.
Yeah.
Right? Like at each step along the way, I've had to learn a new tool. I've had to learn a new industry. All those things help you. In the end, though, it's always about people and how you deal with people. That's most important.
Yeah, that's very much the truth. Very much the truth. So, how did you finish your Coda Capital? How do you get to Blue Chilli?
Well, I was already kind of at Blue Chilli. So, Sebastian and I were in the Navy.
Right.
Both of us in the RAN.
I know that.
And he was an engineer, combat systems engineer. I was a command officer, navigator. And, you know, he came to me with one of the first pitch decks. I'd already run a couple of startups. And I went, this looks like a great idea. So I put some early money in. I was Seb's mentor, right kind of from the start. He had lots of mentors, but I was one of them. Obviously, we had that connection, that naval connection, band of brothers thing. And, you know, one thing led to another. While I was before Coda, actually, I was putting a lot of time in at Blue Chilli. And then it was really at Coda where I had that decision point. And it was, you know, Seb wanted me to come on full time. I was probably half-time at that stage. I'd been doing that for a number of years. And I said, yeah, let's do this. Where I think the relationship with Seb and I is particularly fruitful is, and this is important for new startup founders, especially with co-founders, is you have to have some common point of connection. And I think the military background for both of us was that.
Absolutely.
I could speak frankly to him. He could speak frankly to me. We still do. He knew that whatever I would do, whatever I would say, and I knew the same for him, that the mission was above all, right? So even if something was injurious to me or I did something that was injurious to him, we could always sit around the table and we knew that it was really for the greater good of the company, the mission before self. And so that deep level of trust because of a shared culture was really important.
I mean, that definitely comes from any kind of services, I think. There's no question. Like, you don't typically grow up with people who put the mission before themselves. That's not how most people operate. Right?
I've never seen a child put mission before himself.
No. So, exactly. and I think we take that into adulthood unless we experience something like you have in the Navy that sort of teaches you otherwise. And I think, obviously, it probably gave you a similar way, not a similar way of thinking, because I don't think that's true, but I think probably a similar way of operating, I guess, and that probably helped.
Well, it's interesting. When you look at the Israeli experience in their startup world. And, there's lots of ink spilled about how the Israelis have dominated the patents of the world and have very, very high-tech culture that comes out of their military. You actually have the same thing in the U.S. A lot of the startups in the U.S. have some level of military involvement, and a lot of their people are from the military.
Didn't know that.
And I think the reason is because, unlike what popular culture tells us about military people, they're probably the most fluid thinkers I would ever meet.
Which is the opposite of what popular culture
Yes.
tells us.
And the Army especially, but certainly the Navy as well, everyone works in small groups. And because you're dealing with, as we used to say, 90% boredom and 10% chaos, you get that chaos in startups.
You do.
And so the circumstances change so quickly that you have to be very agile in thinking on your feet. You can't plan, and the analogy would be in software development, that waterfall process or an agile development process, which is very much a learning process. Yep. The military is very much about learning. And one of the key areas I know when I was first an officer, we studied and I think this way, and so I think to Seb, on the OODA loop, which came out of the Korean War. Most American officers will think this way. And the OODA loop is observe, orient, decide, act. But it's a loop. And the philosophy is that the quicker your OODA loop, which means you're more agile,
Yeah.
and if you can get inside the decision-making cycle of your enemy, you will win. Absolutely guaranteed. And I think it's the same in business, certainly the same in startups, where it's highly competitive and the environment is always working against you. So I think that military way of thinking helps.
Yep.
And I think the loyalty to mission in the military actually really helps with startups too.
Absolutely. Couldn't agree more. Now, one of the questions we always talk about, because I always believe there's too much talk about success and not much talk about, I'm not going to use the term fail fast and all that rubbish because I hate all that rubbish. But we've all made mistakes and we've all learned things from them. Now, you mentioned earlier that you made a lot of money and you lost a lot of money. That probably isn't your greatest mistake. It's probably the one people are interested in, maybe. Well, maybe it is, I don't know. But you tell me. Or you can pick a couple, but maybe two things that haven't necessarily gone your way that you learned the most from. Maybe in terms of the way to go about things, but probably more you learned the most about yourself, I think, is usually the more interesting ones. Mm-hmm.
It's interesting. The startup world is very much what you read in the papers about success.
Yep.
And yet, I would say failure and disaster.
I love the word disaster. You keep using that word. It's a cracking word.
which we call pivots.
Yeah.
Is the norm, actually. Yep. And if you look at any venture portfolio, and for the most part, any accelerator, failure and that pivot, running out of cash before you find a business model, is the norm. Mm-hmm. I think for myself, the learnings have always been maybe around people. Okay. And the one where I made a lot of money and then lost a lot of money, and I won't go into specifics to a certain extent, but it certainly was that one for me. And there was some, and I've seen some of those mistakes being made even just this week with a friend of mine. So the mistake for me was that I made a fair bit of money, yep. Sold a business to a listed company, and I came out of that, and I got into business with an ex-customer of mine from Rothschild.
Right.
I thought I did a lot of due diligence, and I thought we had the kind of conversations that we needed, but I have to say I was too early in my career as a business person in a way. And I was too trusting. Maybe it's just being a Canadian. We tend to have a reputation for trustworthiness or trusting people. But it ended up being a disaster. Most of my money went into that enterprise. It was hugely successful. And to cut to the chase, my business partner ended up being essentially an ex-felon. And I ended up in the New South Wales Supreme Court with him, trying to get the company back and then shut it down. And that took me years to work through.
That's huge. I mean, that's...
It was massive, Steve. But it did give me a lot of lessons One probably is, if my wife ever sees this, listen to your wife when she is giving you the judgment of somebody's character.
Yep, I'd agree with that one. I've made that mistake a few times. It's annoying.
Yeah. But whether it's your wife or your best friend or whomever or yourself, and I think you do have to back yourself often, the character of the people that you're working with is vitally important.
Yes.
And it's not just character, but as in Seb's case, though we disagree about things often, sometimes, we have a shared culture where the trust is just deep,
Yep.
and the loyalty is deep. Whereas in that previous case, the trust ebbed away very quickly, the loyalty was not there, and it was every man for themselves.
But you thought it was.
I thought it was at the start, right? And I heard somebody joke lately that you need to be very careful with your investors that you bring in, especially VCs.
Yes.
I think it's the same whether it's angels or investors, because the average time that an angel or a VC has money in your company is 10, 11 years.
A long time.
Long time. The average marriage lasts 7 years. So, the old phrase is that you're basically marrying your investors because it will last a lot longer. And just like a marriage, fighting over finances and a breakup can have devastating effects.
Same with founders, right? Same with co-founders.
That's right.
I've had that experience too, and it is
Absolutely.
like a divorce. It really is.
It is. And I don't think we're prepared for that. So I suppose when I'm working with founders and I'm working with them as kind of a personal coach, I'm working with them to help set up a governance board or an advisory council or advisory board, one of my key discussion points with them over and over again is the people that you're dealing with, you need to have a deep implicit trust, and you need to have some kind of connection that will take you over the boundaries of failure and defeat.
Yep.
And that's tough.
That is tough.
That's why friend and family investments in startups can be fraught. And again, when I sit with founders, it's one thing I always question them on. But I'll give you a question in the same way
Go for it.
about founders. So most people think that startup founders or startups are best built by teams. The data from Kauffman Institute, MIT, a number of studies, is that the best startups are started by individuals. Solo founders are more successful and raise more capital. This is a very longitudinal, multi-year, multi-country study. But there is one team that we have found is above all other teams. And hazard a guess who that would be.
Siblings.
Close. Oh, actually, we do have a pair of twins that are awesome founders. Husband and wife founders.
That's crazy. You just would never think that.
We'd sit around the table, as judges, and I remember once, the first time this really came home to roost for me, because I was looking at some of our past cohorts, and we had a really good husband and wife team.
Yep.
And everybody around the table who were all, I think there was one other married person, and everybody else was single and young.
Yep.
And they said, they'll just fight all the time. And I went, are you kidding me? These guys, have you listened to them and you looked at where they've come from? They've already had a business and sold it. They have 4 kids who are now growing up. When I asked the question, who makes the decisions, which is my usual question,
Yep.
he said, she does. I knew right away that this was a team that had weathered bad times, understood their communication styles, understood who and how they made decisions, and were in it for the long haul. Like, what more do you want from a team?
Absolutely.
Right? So those kind of personal dynamics are super important.
It's interesting. I mean, those are probably the 2 areas you would think husband and wife would say, and also sole founders. And I know we spoke about this last time we spoke. When you told me that sole founders were the most successful, I found that astounding, because you don't see, and I'm a sole founder now, as we talked about for the first time, and I'm really loving it.
Yes.
But I've had co-founders in all my other businesses. And if you look at most startups, I mean, even look at the certain programs out there that will only take co-founders. They won't take sole founders,
Yes.
right? Which is crazy when the data says otherwise. But it's very popular now to have about, it seems 3. 3 seems to be the cool number right now.
Yes.
And I can see that now, having lived through it, but most people would not believe that sole founders would be better because they don't have all the knowledge, of course. But I think, I don't know. I find it quite interesting, and I was quite surprised when you told me that data.
There was only one founding threesome that ever worked, and that was, Father, Son, the Holy Ghost. I mean, it is usually a recipe for disaster. It didn't work for the triumvirates in Rome.
Yep.
Even co-CEOs is very difficult. BlackBerry did it very well, but those two gentlemen were Canadian. They played hockey together, and they had a deep bond. So it's difficult. What I would say is that when you make the argument for the solo founder, it's not that there shouldn't be a team there. The argument for the solo founder is that in the early days, you need unity of purpose and unity of decision making. And every group I've seen that comes in, 3, 4, 5
Five's crazy.
founders,
Crazy.
and I ask them the question, how do you make decisions? Usually they've never figured it out.
Collaboratively, I bet.
Collaboratively. And I right away go, fail. I know they're going to fail, right? I want them to do well.
Yeah, of course.
But they will fail. And usually I would give it, usually it's 3 or 4 weeks when you put them through a boot camp and have them start asking some serious questions, serious organizational, serious governance questions. Mm-hmm. They fall apart. And that's almost across any age as well. But you need unity of purpose. We may have a co-prime minister, a deputy prime minister, but we have a prime minister.
Yep.
Right? As humans, we are built to have somewhere in the structure leadership. The internet has given us the fallacy of wisdom of crowds and a fallacy of, organization by groups, and it works for ants to a certain extent, although even ants have a queen.
Yep.
But it's in startups, things are happening too fast.
How many startups are you working with in terms of your Blue Chilli role? How many are you working with at the moment?
Sure. Well, we've built over 160 in the last number of years,
which is a lot.
A lot. Our last cohort, which is the Future Minds Accelerator.
Yep.
Which was sponsored by Rio Tinto and Amazon Web Services. We had 14 startups in there.
Yep.
It's a lot of work. At any one point in time, I'm helping, this week I probably have 5 conversations with startups that are either raising capital, setting up an employee share ownership plan. Mm-hmm. I've got 3 that are working on advisory councils and boards. So I would say at any one point in time, any week, I probably interface with 7 to 8 startups, maybe more, and then sometimes in a group. And that's very concentrated.
Yeah.
Concentrated discussions. An hour working on, let's work on setting up your advisory board or your advisory council. Let's go through this process. Let's make sure it's deliberate. We have clear objectives.
Yep.
And put a little bit of planning in. I'm not, I think planning is good, but planning is only a basis for change. I think Napoleon said that. Maybe I said that. I don't know.
You or Napoleon?
Me or Napoleon. One of those.
You've both been in the Navy, right? So what's the difference?
Well, I think he just rode on the ships. He wasn't in the Navy. He owned the Navy. But plan is only a basis for change.
Yep.
If you don't plan these things, and so that does take some time. So when we're working with our startups, we're not doing it for them, but we're really there as that sober second thought. Which is important.
That leads nicely into a question that I think is going to be really good for our audience. Obviously, 130 startups, right? That's a lot of startups. I don't know how many of those are still around or how many have failed. I'm not sure, and we can talk about that as well. But I would be interested to know. But I'm also interested to know if there's a couple of very, very common mistakes that anyone who's watching, who's in a startup, running a startup, thinking about a startup, wherever they're at in their journey, that everybody kind of makes. That doesn't necessarily make them fail, but it would be better if they didn't, or that you help people overcome that. There's always a couple of things that everybody does. So I guess first up, how many are still around? Do you know out of that? Because that's obviously been quite a long period of time.
Yeah. COVID has made an impact.
Yeah,
obviously, not as much as we thought at the start. At the start, we got together with a lot of our startups. We went on our Slack channels and email and called them up. We've got a few zombies out there. We've had 3 or 4 that have decided to shut the doors. Mm-hmm. I think they would have shut the doors anyway.
Okay.
I think COVID has shaken the tree a little bit, and the ones who had a good grip, you know, on the limbs of the tree and have held on and have thrived and are picking fruit.
Yeah, but it's sped up
take
the
the
demise,
analogy.
really. of
That's right.
others. Yeah.
If I look at I think we take 160, we probably have a little over 100 that are active.
That's huge.
Yeah, it's
Very high percentage.
We usually say that they finish the accelerator with about I think it's an 82% success rate in the accelerator. This last one, all of them finished the accelerator. Nobody washed out, which is good. I guess.
outstanding.
Yeah.
It's not good, it's outstanding.
Yeah, it is outstanding. Our venture fund, which was one of the first early stage venture capital limited partnerships in Australia,
Yep.
is now closed to make new investments. It closed to take new money 5 years ago. So it's about 6 years in,
Yep.
and I think our annual ROI is over 89%. Wow. So it's been a great fund. I would say that we still have issues with the sector in general, the startup world in general in Australia.
Yes.
And our startups reflect that in that investment is still spotty.
Particularly early, we've talked about this.
Yes.
That time when you really need it, when you just need the $1 million or the $500,000 or not a lot,
absolutely.
it's just desolate, right?
It is. It's the valley of death, as we call it.
Yep. It's great.
And we tried, we over the time that we had our venture fund, I think we tried successfully to seed into that.
Yep.
And we've got some great startups that have come out of that. But if I look at our startups overall, it's interesting you said what mistakes do they make. The whole reason for our Blue Chilli Accelerator was, unlike a lot of places, to help you be successful.
Yep.
Our kind of mantra internally, and certainly Seb and I drove this. Seb, as an engineer, was very focused on how do we reduce the risks,
Yep.
right? How do we take away the barriers? And that was certainly our mantra with She Starts, to help female entrepreneurs.
Which is my favorite fund we talked about.
Yeah. So taking away those risks and those barriers was really important for us, and it informed how we built our programs, and I think that was what made us successful. So usually, for certainly non-tech founders, one of the biggest mistakes is to spend way too much money on development, outsourced development, sometimes offshore, where then you can't use it for R&D tax claims, or onshore, and because they don't know, they often will be taken. Right?
Yeah.
The development costs are often much higher, sometimes. There's some good groups out there, don't get me wrong. But they don't know what they don't know. So for us, I would say to the founders at the start of the accelerator, one of my jobs is to take you from being a founder to being an experienced CEO by the end of the 6 months, if we can do that. And part of that is you will learn, because you're working with our developers and our product people, and because we take a 5 to 10% equity stake, we will do the right thing by you. Part of what we're doing, we will teach you how to run a development team. We'll teach you what you should be looking for and not be able to see. And so I think a lot of solo founders out there, and teams often, don't know the intricacies of building a tech startup.
No.
And even though the barriers may be lower, the information barrier is still high. And there's an asymmetry there that usually works against a founder. So that would be the first thing I would say, is that a lot of founders make that mistake in terms of development.
Yep.
I think a lot of founders make the mistake in terms of founders, and they are told, certainly when they go to their first angel, or if they ever get to a VC meeting, you need a tech co-founder, or you need some co-founders.
And I hear that all the time. The amount of people that come to me that say, I can't get funding until I hire this role, can you help me? And we talk about this is crap. You don't agree with this at all, right?
I don't agree with it at all. I don't agree with it at all. And this is because, sorry to the angels of the VCs watching, but I think they actually haven't thought through the human behavior and human problem of venture. There is a human problem underlying investment. There's a human problem underlying venture. My advice to everyone is, you're right, you need somebody to help you with tech, or you need somebody to help you with sales, but you are the founder, They can come in and be the CTO, they can come in and be the chief marketing officer, but they are not a founder. And don't let anybody tell you differently. Because as soon as you cede that founder mantle, the accountability, responsibility, the pucker factor, I think, goes.
Yeah.
And you lose your efficacy. You know, there's one founder, and I would say that makes much better startups. But like I think we were talking before, I think we've done it to ourselves. Every kid has to come off the soccer field with a medal.
Yep.
Everybody joining a startup has to be a co-founder or a chief, and I think that's counterproductive.
Yeah.
Personal view.
Too much inclusion.
Yes, yeah. We have to run efficient, productive enterprises that are well led.
Well, the military is a great example. I mean, there is no participation messages. It's a very clear structure, and it works very efficiently.
It does. There also is a clear structure of feedback.
Yeah.
And you don't plan a mission without getting feedback from your troops. And your troops, if you have a good relationship with them, the men in your division and the men on the bridge with you, when there is an ability to gain their advice, you do it.
Yeah.
Even if they're like the able seaman behind the wheel, you can ask advice all the way along. It's you that makes the decision in the end, but
that's the important part, right? It's you that makes the decision. You can ask advice. It's not a group decision. It's your decision, but you're just listening to everybody, and there's a very distinct difference.
Yes. And what everybody thinks from TV or the movies probably is that in the military model, the advice is asked and then swept aside because the leader
knows best.
Yeah. Whereas no leader will, make it past, I don't know, the second round, the second quarter, unless they are taking the people that they work with, their opinions, in train.
Yeah.
And that is tough. Listen, I find myself often agonizing over little bits of information, and it's very important not to.
Yeah.
If that's been one of my learnings, it's make a decision, act, and then start that OODA loop again. Mm-hmm. You can change a decision.
You can.
And
that's what people don't. They feel they need to stick with something rather than go, actually, that was a disaster. I should never have done that. I need to change this right now. They'll go, no, we've made the decision. We're going to keep going. We'll see if we can make it work. Rather than, no, that was a stupid idea.
Yes.
Let's just change it.
One thing you learn on a bridge of a ship when you're dealing in close quarter situations is that I can make a decision, and then once I make a decision, it changes the whole dynamic around you, especially in a close quarter ship situation. Mm-hmm. Because everybody else changes too, often. And then you have to change again. And so even if they don't really change, the environment may change, or it may not, the decision you make might have slightly unintended consequences. So you have to watch. You never make a decision once and just stick to it, which is what, again, people think about it for military decision making, is very iterative.
Yeah.
And that helps in startups.
Yeah. And did you tell me, I think it was you that told me that non-tech founders are more successful than tech founders, as in
Yes.
the technical people.
Yes.
It's not an advantage to be able to code.
No, two great pieces of information out of a big MIT study a couple of years ago. It was very longitudinal. There's good, as I said, good data out of the Kauffman Institute in the US.
Yep.
The Wall Street Journal and the New York Times both reported on it about a year and a half ago. Non-tech founders are more successful, and the thesis or the hypothesis, and I've seen it at play over and over again at Blue Chilli, they come in with a problem that needs to be solved, not a solution that they think is awesome. And that problem needs a solution. Often, especially nowadays, because we see apps, we see people solve problems using large databases, and people have an inkling of what that should be. They just don't know how to build it.
Yeah.
Right? I'm sure you have lots of friends who have said, they knew how they wanted their house to be, but they didn't know how to do the plumbing.
No.
Or how to do the roofing, or how to do the landscaping. They know what they want. They know the problem they're trying to solve. And so that's very much where a non-technical founder who has deep industry experience comes in. Now, we often have founders who come in with problems that are worth solving, and they pitch. But usually, one of my biggest questions is, do they have the industry experience in that sector to be able to make this happen? Are they the right person? If they don't, they're much more likely to fail, and they're much more likely for us to not select them for an accelerator.
Yeah.
And that's because, especially in enterprise and business-to-business activities, you need to know how deals are made, how the market's structured, who the market players are, what is the competitive behavior of the market. There's a whole bunch of things that underlie your ability to make something successful. Just having some technological breakthrough or an app doesn't usually cut it.
Yeah. I love the fact you brought plumbing in, because I know you know how to do your own plumbing.
I do.
You're one of the very few people who do know how to do the plumbing. Now, I would have told you I was going to ask this question so you could think about it before, and it's the belief one, and it's not always an easy one. But is there a belief that you have had that has changed, and what was it that? Because and I mean a proper belief. Then what was it that made it change? Because people's beliefs don't change that often. They tend to be ingrained.
Yeah, I think personally a lot of my beliefs, I won't say are static, but they grow over time. There's a patina that gets built on, and you're pretty comfortable.
Well, they come from experience, don't they? That's
come from experience, that thin slice of experience that just gets layered on. Certainly when I first got involved in the kind of the startup world more and more, one of the things I always heard was that you need to be global, right? And I fought that one tooth and nail. I really fought that one, because my view was, you know what, you should be able to build a really good startup in Australia. You should be able to almost build a unicorn in Australia. And we have examples of people who have built unicorns in Australia.
A couple.
Technology One out of Brisbane, great example of enterprise tech company that was built here. The ex-CEO founder, ex-chairman, he's now doing other things, very successful, super smart, a lot of time for him in his opinion. And he said to me just not too long ago, he wished he'd gone offshore earlier. And he didn't, because he didn't have that kind of confidence.
Interesting.
Now, I've also looked with COVID at a lot of our startups. And even though I've been kind of moving back, I've been moving towards the accepted view that you need to be global, I think COVID has really taken me right back there. So whereas most people think, well, we need now to close the borders down, and sometimes literally as well as figuratively, and focus on our home country bias, I actually look at this now and say, you actually need to build for scale to go offshore. Especially in the digital world. There is no reason why you should be just focused on Australia. And if, from the investment point of view, Steve, if you come to me and say, listen, I'm building a startup, it's going to be just in Australia, and I think I can get market share, blah, 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 I'm going to look at that and go, oh, okay. If I transplanted that to the US, and you came to me and we were living in LA, and you said to me, I'm going to build this startup, it's only going to sell to people in LA.
Which is kind of the same population,
The same population, exactly. I'd look at you and go,
you're crazy.
Nuts? You're crazy, right? If you have a startup that is solving real problems for real people, then you almost have a moral obligation to go global with it.
Yep.
You have to do it in the right way. But whereas often I would counsel founders to kind of disregard that a little bit. I think now I'm much more likely to say, listen, we have to think about this you have to build for global at the start. And you have to think that way. And if we think too parochially, you just won't get the momentum. Now, we have a real problem in Australia with investors who will say exactly the same thing. But then if you're a startup and you decide you want to go offshore, they will never give you money
because they're risk adverse, right?
They're risk adverse.
Huge risk in that.
That's right. And they are right away going to say, well, if you're raising capital to go offshore, sorry, I'm not in. I just don't think you can do it. So it's really tough. That's why I think you have to really start from the start, thinking about and laying out that vision that you will be in the US in 2 years.
It's part of the plan. Always was.
Part of the plan.
We're not deciding to go offshore. We were always going offshore.
And that roadmap shows vision.
Yeah.
Right? Their roadmap shows that you've also got some leadership, and I think it's the way to rally your troops, so to speak, as well.
We talked about this just before, and I'm interested to hear them now because I told you not to tell me because I wanted to wait to see.
All right.
Podcasts, books. So any particular podcast that you're listening to and any book that has had an impact on you, I'm sure there's many, but maybe one that you think might be relevant to our audience,
Sure.
which is founders and VCs and so forth.
It's interesting. Podcasts, I would start them and just not really follow through. And I think Spotify kind of got me over that hump.
Yep.
Being able to see them kind of racked up and knock them down, maybe a little bit of gamification as that green line goes to the end. But at the very start, and I still listen to them fairly often, are some of the BBC podcasts.
Okay.
Life in Our Times, which is philosophy. I was a philosophy major, graduate work in that area, so that's still in the back of my mind, and it informs a lot of the way I think.
Mm-hmm.
I've loved Reid Hoffman's Masters of Scale.
Yes.
But the two that I probably listen to the most, for better or for worse, one is Jocko Willink's The Jocko Podcast.
Don't know that one. What's that about?
Jocko was a U.S. Navy SEAL.
Mm-hmm.
He runs an amazing consulting business now. He is an incredible commentator on leadership, on decision making, and what I love about his podcast is he was an English major, so he got into the SEALs, then they sent him back to university, right? He did an English literature degree. So he loves Shakespeare, he loves history, he loves books. And so most of his podcasts are either an interview with somebody who's super interesting, or he will often take books, and he's even done some Shakespeare, and he will spend 4 hours talking about life in the military, and the book.
Wow.
So from a kind of an erudite podcast that you wouldn't have expected from somebody like that,
Yeah.
they're amazing. Now they're long form,
Yep.
right?
You said up to 4 hours, right?
Some of them are up to 4 hours. He's written a couple of books about leadership, extreme ownership, well worth it. And I actually think probably the extreme ownership book that he wrote with Leif Babin, which was one of the guys he was in Iraq with, is an amazingly good leadership book. And I know some of our founders have read it and said really showed them the kind of responsibility they should take ownership. I'll give you a little nugget from the last presidential debate. Trump said, how did it go?
I actually watched that one.
It was an interesting one, wasn't it?
It was. I enjoyed it, actually.
So he said somebody said something about the coronavirus, and he said, I take full responsibility for that. And then, exactly like right away, the next sentence was, now, I had nothing to do with that. Right? So he both said he took ownership, but he didn't.
Yeah.
Right? Taking ownership is very important to Jocko, as any of your readers or any of your listeners, if they listen to Jocko, would see. The other one that's been very interesting for me is one called Hidden Forces. Politics, a lot of finance, like deep finance, a lot about uncertainty science, chaos.
Macroeconomics, that kind of stuff?
Macroeconomics, really broad,
That'd be interesting.
broad spectrum.
What's it called again?
Hidden
I
Forces.
think I might enjoy that one.
Yeah, I think you would. There's some amazing, like I sometimes wonder how he gets people who are, ex-secretaries of state and academics and what he also does is he prepares these amazing long form 50, 100, 250 page notes that he shares with the subscribers from his research before every podcast. So there's some deep questioning and certainly some of the recent ones that I've listened to on uncertainty and decision theory, certainly in finance and it can apply to the startup world as well.
Uncertainty
have been great.
Is a great. I'm fascinated by uncertainty. It impacts humans more than anything, and it's and yet everything is uncertain. But it's often just the false belief that there is a certainty, even though there never actually is.
Oh, it's true.
Yeah.
A question for you: did you ever learn about probability mathematically when you were in primary school or high school?
Not that I can recall.
No. I don't even think it's taught. I've asked my kids who are going through high school, and there's very little probability. And and work in probability. But the fact of the matter is, everything is about probability. Everything is about making decisions under uncertainty. And we're not giving generations the tools. The military gives you tools to make decisions and then remake those decisions in highly uncertain, highly fluid environments. And that's what startups are, highly fluid environments.
Yeah, absolutely.
And the ones that are able to succeed are the ones that are able to
remain fluid.
Yeah, and make decisions and be able to hold strong opinions, but in the face of facts, be willing to change them very quickly. In terms of books, I think you asked about books. Thinking about that, there's one great book called The Mom Test.
Mm-hmm. That sounds a good book.
Great book. Buy it on Kindle, anybody who wants it.
Yeah.
Hardback, although I shouldn't say this because the author would kill me if he knew me. I think it's $50, $60 hard, soft cover on Amazon, but it's a great book. The basis being that the short précis of the book is that your mom will lie to you. If you come to her and say, listen, I got this great idea for a startup business. She goes, Stevie, that is so wonderful. I know everybody will buy it, right? Nobody's going to buy it.
Well, Mum will. Mum will buy it.
Well, Mum
and
will
maybe
tell
Dad.
you,
Maybe
right?
Dad will get one for Father's Day.
That's exactly right. So, that's a great book in terms for startups, especially in terms of making sure that you understand how to validate your solution
Yep.
and how to validate even your problem. The other one that's written by an American professor is called, and I come back to it over and over again. It's not a well-known book, but it's called Disruption by Design.
Yes, I've read that.
Yeah. So Paul Pates, who's a professor of entrepreneurship at Stetson University in Atlanta, wrote it. He was a software developer, then kind of moved into the professorial side.
Yep.
Fair disclosure, Paul and I grew up together.
Right.
In Canada.
I think it was you that told me about the book, actually.
Yeah. He used to beat me at chess and I'd beat him at backgammon. I think we were undefeated on both sides. So he's obviously a much smarter guy. But it's a great book and it balances off that Clay Christensen view of disruption quite nicely and gives you a lot of real practical ways of looking at disruption from a design point of view. And I think to a certain extent some of the things that I've relayed to founders has helped them not make mistakes in how they have built their businesses.
Cool.
So,
Last question.
sure.
If someone is thinking about applying to Blue Chilli, whenever you do your next intake,
Yes.
Firstly, what advice have you got for them? And secondly, what are you going to offer them in the program? What does Blue Chilli give you in that 6-month period, other than making you a CEO?
Every program's a little different, so they're all looking for something different. Our She Starts program, which hopefully will launch our fourth iteration of that in 2021, is looking for female entrepreneurs.
Yep.
Future Minds was education technology. We'll run that again this next year. We've got a couple of others in the works. In each case, though, the clarity of the problem and the clarity of your solution and the clarity of your business model is by far the most important thing you can set down. You should be able to, and it's not just the elevator pitch or the Gaddy pitch. You really have to think it through, and you have to have people who aren't your mom critique that. So what you give us in those applications is succinct and concise and clear. And that's very difficult for people. Some of the best people to help you would be even copywriters who understand how to use language to give you that succinctness and clarity. Read the questions and come in willing to, just like into a boot camp in the military, to test yourself. Right, and to test your assumptions about yourself, to be willing to change, to be both coachable and also, of strong opinion.
Yep.
But it's the clarity and conciseness I think is important. Business model is usually the one thing that people just don't seem to get. And they don't follow the value chain through, and they don't think, well, why would somebody put their hands in the pocket to pay you for this service or product? over and over and over again.
Yeah.
It's probably the biggest one. Not thinking through the business model. Or saying, I haven't a clue how this business model is going to work. That's why I'm coming here. This is how I think it might work.
Yeah. Okay.
So,
fantastic.
yeah.
Luther, thank you so much. It's been fascinating as always. I've very much enjoyed it.
Great to see you for the first time face to face.
And nice to see you. Yeah, it's great. I'm meeting all these people doing this show face to face that I've known for, some people I've known for, like nearly over a year, and I still have never met. So it's a good vehicle to do that.
So if you think about that, 2021 is going to be fantastic. We're going to be getting to know people that we feel like we've known for a long time, but it's just all been Zoom, and now we get to actually have human interaction with them.
It's funny. I had a girl on one of the previous shows, a lady called Laura, that has a business called Level, and I have had so much interaction with her over the last 6 months. I didn't even realise I'd never met her, and she was so tiny because I'd only ever seen her sitting down, and she's literally tiny. And I was like, oh my gosh, I was so shocked because I don't know, I've just always seen her sitting in front of a Zoom screen. It was quite funny, and she was like, oh my gosh, you're so tall. So it was an interesting moment.
That's great.
But thank you again, and and good luck with the next intakes next year.
Thank you very much.
Thanks, Luther.